What's up, traders? Welcome to GA Trading Club's State of the Club review for the month of October 2023. Now, to kick things off, if you follow one of the links down in the description, that takes you to a sheet where we track all the official trades, whether it's a win, whether it's a loss, you'll find that for the month of October, we had a net gain of 4.5%. And for the previous month of September 2023, you'll see the gain was about 2.66%. Now, there was a 1.5 time growth between the months of September and October. And this can be tied to the idea that we always push in our community of reviewing your strategies. Find what's working for you and take out what's not working for you. So we really did not change much between these 2 months, but we just kept doing what we do. And the idea is also understanding that markets are cyclical. So for example, if you look at the month of October, during the first 2 weeks, they were actually losing weeks. But then you'll see that our trades picked up during the last 2 weeks of October. And you'll see that as much as we had a couple of back-to-back losing trades in the first 2 weeks of October, including break-even trades, when we started winning trades during the third and fourth weeks of October, that actually gave us back our losses and more profit. So the idea here is also the 1:2 risk to reward, which is the primary risk to reward that we use for all the official trades that I do send out, with the small caveat of if you are in a trade and you're risking 1:2, you have a risk to reward of 1:2. If you achieve a 1:1 risk to reward, you go ahead and set break even so that at that point, your trade is risk free. Now here, just a small analogy, and I know I've covered this in other reviews. Assume you lose 2 trades and assume you're risking 0.5% per trade. So if you lose 2 trades, you are down 1%. Okay? Assuming you're risking 0.5% per trade. Now, let's assume you win the next 2 trades. If you win the first trade, you're actually back to break even, because if you're risking 0.5 and then your trade hits full TP, you make 1%. So this one winning trade would cover the 2 losing trades. Now let's also assume that you win the next consecutive trade. You make another 1%. So now you move from break even to being up 1%. So you can lose 2 trades, but if you win the next 2 trades, you're up 1%, or however percent you are risking for that other trade. So that's the value of our risk to reward ratio. I know there's other people or other groups out there that do maybe a 1:4, 1:5, but for right now where we are at as a community, so keep in mind we're only 6 months old. So we're still growing, we're still learning a lot of things. Personally, I've been trading for about 3 years now. The end of this year will be my 3rd year in trading. So even for me as an individual, I'm still learning a lot of things. So my idea is to inspire or to push that to the people who join the community and show them that this whole thing is a growth process. It doesn't take a month, it doesn't take 3 months, it doesn't take 6 years to be profitable. But what I can tell you is that out of looking at the people that I know are verified traders and the people that I know are profitable and consistent traders, it does take somewhere at least 2 to 3 years to start seeing some nice results in trading. So I always push this idea to the members of the community such that if you haven't at least had 2 to 3 years in the trading game, and this is consistent, it's not like you're on and off trading, that every week you're doing something with trading for 2 to 3 years. If you haven't had that, along the way, you will have instances where you feel like you want to quit. And do not do that. Because think of it in the same idea. People go to college. The average years in college, or to finish a college degree or to attain a college degree, is 4 years, 3 to 4 years. So if you quit on your first year, if you quit on your second year, you will never get to that pinnacle where you're now awarded that degree. So think of trading as such. Think of trading as learning, because the issue is, even for me when I was starting, I came into trading with the mentality of money. I want to make money. I want to make $10,000 a day, etc. It is possible, but it does take time. That's the first thing you need to realize. And I like the ideas or the groups or the influencers or trading personalities who push on the idea of learning, because money, you can gain money, you can lose money, but knowledge, you can't really lose knowledge. Once you learn something and once you find what works and what doesn't, the only thing that matters is for your strategy to work. How often does your strategy win? How often does your strategy lose? If you have those statistics in mind, that with this strategy, yes, there are times that I'll lose, but I win more times. So that's why, even for me, with the idea of a 1:2 risk to reward, for example, for my strategies, I know that works optimal for now, for where I'm at with the knowledge that I have, such that if I'm at a 1:1, I won't take profit just so as of yet, because I also know that the instruments that I'm trading, for example, with gold, the trades we take on gold, we have a 30 pip stop loss and a 60 pip TP, like a $3 stop loss and $6 take profit. Now, gold is volatile, so whether it's stop loss, whether it's break even, whether it's the full TP that will hit, most of the times it will hit in under an hour. We've had times where such a trade, especially during this current month that we're in, it took a little bit, like 2 hours or something. But during normal market conditions, those trades move a little quickly or a little too fast, and volatility kicks in. For example, the other main instrument we trade, US 30, we do a 50 point stop loss, 100 pip or point TP. And of course, if you've traded US 30, you'll know that that's ideally not, it's not such a wide TP or stop loss range, because also US 30 is a volatile instrument to trade. So that's also the idea there is, for me, with the strategies that I've developed, I've come to find that this take profit and stop loss values are the optimal ones. Because when we actually started off in trading for gold, we used to do like a $5 stop loss and a $10 TP. And for US 30, we used to do like a 100 point stop loss and 200 point TP. And that has, over time, over learning and coming up with new strategies, that has then allowed us to come back down and adjust this take profit and stop loss values to a more optimal entry, such that we are in trades not so long, and also the trades, the win rate is good enough, and it leads to a nice return at the end of the month or at the end of the day. Now, the other thing that I have tried pushing out to the community, or to inspire upon people to ponder about, is the frequency of trading. Now, there are different kinds of traders. There are scalpers, there are swing traders. Now, the idea here is, first of all, understand that trading, what trading does to somebody, to your body, to your health, for a lot of people, it's actually negative. For a good amount of people, here's the reason. When you're in a trade, whether you're risking your own money or whether you're using a prop firm or other people's money, in any way where it's not demo money that's not on the line, there's some sort of emotion tied to that. So if I'm trading my own funds and I'm in a position, you can start getting a raft of emotions. It can be excitement, maybe when your trade is in profit. It can be despair when the trade is going against you and you can see the trade is almost going to a stop loss. Hopefully you're using a stop loss. So what these emotions do to you as a trader, and even as a human being, they evoke certain chemicals within your body. So it can be adrenaline. I'm not a chemist, but I know I forget what the negative chemical is, but the idea is, if your body is secreting these chemicals associated with negativity a lot, that will harm your overall health in the long term. So the idea here is that when you are getting into a trade or in any trade, you want to make sure that you're also looking after your health. So you're working out, you're eating right, you're whether it's meditating, so working on your psychology, because you want to get to a point where you're in a trade and the outcome of the trade, whether it's a win, whether it's a loss, you're not having a lot of emotional attachment to that trade. Now, for me, what has worked, because again, traders are different, but I did at some point in my trading journey, and this was a while back, I was so much emotional in my trades. And this was probably my first year of trading. So this end of this year again marks my 3 years for me in trading. But there were times when, for example, my blood pressure was high, was off the roof. And I got to a point I'm like, okay, why am I chasing this if it's leading to negative health? And I'm speaking about this because I've seen or I've read of people, of traders who unfortunately succumbed to whether it was heart attacks or blood pressure issues when they were actually young. And what worked for me, what I had to change was I changed the notion of I have to trade every day. Again, this may not work for everybody because every trader is different, but the same idea about putting your health first is the same. So I noticed that I was over trading when I first started trading. I was over trading, over leveraging. But now, 3 years, fast forwarding 3 years, I have improved a lot of things. I don't over leverage anymore because I have a predetermined amount of risk per trade. I always have a take profit and stop loss per trade. I have the strategies that enable me to hop on or hop off a trade. The other one that I have worked on for this, and I started in the month of October, and I'm also trying to propagate this into the community, is to limit your trades in a day, or to have a percentage limit of how much you're willing to lose in a day. So for example, in a profit account, the average loss or the max daily loss for prop firms out there is about 5%. So for me, starting off, when I started this community about 6 months ago, I used to risk 0.5% per trade, and I used to take about 5 to 6 trades a day. Now, I got to a point where I was always also on the charts because taking 5 to 6 trades a day, it made me be on the computer for an extended period of time. So I said, okay, for the next 5 months, I want to get to a point where I'm only taking like 3 trades a week or 1 trade a day, etc. So what I did, I moved from taking 0.5% or risking 0.5% per trade and started risking 0.75% per trade. So what this did, instead of taking 6 trades, and then by then I used to give myself a max loss in a day of about, actually way back I never used to really focus on it, but when I started risking 0.75% per trade, I used to give myself a limit of not losing more than 2 trades in a day. So not losing more than about 1.5% in a day. Because if you lose 2 trades while risking 0.75% per trade, that's minus 1.5%. So moving to risking 0.75%, what that did for me, it enabled me to then move away from taking 5 to 6 trades a day, and I started taking about 2 trades, 3 trades a day. And that actually shifted and increased or improved to me taking about 1 trade a day or 1 trade every other day, because by then I was more cautious, knowing that I only had 2 setups in any given day that could go wrong. Now, after I consistently worked on, and you guys can see that on the spreadsheet, you'll see when we used to risk 0.5% per trade and when I started risking 0.75. And then I got to the goal of I wanted to start risking 1% per trade, which I did towards the end of October and now in the month of November. So also while risking 1% per trade, nothing changes. The same thing, I still have, if I lose 2 consecutive trades in a day, I'm done trading for that day. Now the question is, if you get to a point as a trader where you're giving yourself a max losing percentage for the day at 2%. So with that 2%, I can even decide to just take one trade a day, such that I risk 2% per trade. And if that trade wins, then I'm done. If that trade loses, again, I'm done also. But with that 2% also, keep in mind, with that 2% also, you can also risk 0.5% per trade and give yourself an allowance of 4 trades a day. So the question is, do you do better if you take multiple trades, or do you do better if you take fewer trades? For me, I found that as a trader, based off of the trader I am, I did better when I was taking fewer trades a day. So with these 2 trades a day, it doesn't mean that I have to take those 2 trades a day. If I don't get a trade setup, then I know that, okay, I'll wait for the next day. So there's been times, I think, for example, this week I've only taken 2 or 3 trades in the 5 days. So the question then is, if you want to work towards this and you give yourself a max cap of 2%, and let's say your risk, and for my community, I do not advocate for risking anything more than 1.5 or having any loss more than 1.5% losing day or loss in a day. So this is why for all the official trades, they still remain with 0.75% risk per trade, even though for me personally, I'm doing 1% per trade. This is because I want to be cautious of the levels each trader is in our community, because they're beginners, they're professional traders, so everybody's not on the same level. So the official trades I send out still remain with 0.75% per trade. And also, if we do take a loss on a trade that I've sent out with 0.75% risk, and I do see another trade setup, I'll actually ask folks or people to take that trade with a 0.375% risk, such that if they lose that trade as well, which would lead to, say, 2 back-to-back losses, they would only be down minus 1.125% for the day. But if they win that second trade, it would take them back to break even, because if they win a 0.375% trade with a 1:2 risk to reward, they would have a gain of 0.75%, which would cross out the first loss they had. But that's just something that I wanted to emphasize in this recap or review, to make sure whatever you're doing as a trader, make sure you're monitoring your health, mental health, physical health, spiritual health, because it does count. When you're young, that's why you might not notice it a lot, but as I've said, I've seen a good amount, some well-known traders even paying the ultimate price for health complications that can be traced to trading. But I just, again, want you guys to be safe out there. But anyway, let's get to the second item that I wanted to talk about today. The second item that I wanted to talk about today is our EA. Now, in the previous monthly recap, State of the Club recap, I talked about our EA that was coming up, and I hoped by this review I would be talking more about it. And that's what State of the Clubs are. It's, to be honest with you guys. So currently we are running into a licensing snag that I'm still trying to work out with the EA. So again, at this point, it's more of a waiting game, but definitely it will be out there sooner, hopefully, rather than later. And again, this is a product I do not want to overhype it or overextend it, because here's the thing. Let me be honest with you guys. This instrument, and I showed you guys like a screenshot of its performance in an account that I'm running it on, and this is just for showing that one thing you need to understand: no system is perfect. So if you think that the new EA that I'll be deploying is the silver bullet or is the holy grail, it is not. There will be losing days. That's a fact. There will be winning days. The key thing, and keep in mind, with this EA, it's the same. Whatever you guys see on the spreadsheet, it should give similar results. The reason I'm starting off with this is I do not want people to stream in thinking that this is it, that coming with high hopes. I would rather give the truth. And I'm giving this truth based off of my experience as a trader and also my experience with the EA, because when I showed you guys the curve the other time, you guys saw it has a steady growth curve, but there are times when it will dip. But here's the thing. The reason anyone out there will not be successful using our EA is if you're not using it according to our strategies. The other way is if you're using it during, and I'll create a comprehensive video when I release it, you're using it during consolidating markets or low liquidity markets. For any of my strategies out there, and I talk about that with our members, any of my strategies, the kryptonite to any of my strategies is ranging markets or low liquidity markets. So the EA may not do well in these markets. However, you can still use it in them. And the best thing about it is that it is able to detect this ranging markets. And if a trend breaks out and you are stuck in the opposite side of the trend, it's able to not keep jumping in positions in the opposite way until, say, the trend reverses, or there's other decisions you can make in the inputs. But I wanted to first start off because I would rather have a community of 200 or even 20 people that are willing to put in the time to learn, as opposed to a community of 1,000, 2,000 people who are just looking for the holy grail and they're not willing to learn about the markets. So that's the other part. If you are willing to learn and stress test, because in the last review, I said this product was open to a lot of stress testing and criticism, because that's the only way we can make it better. But I do not want to bring in people who, again, expect to be spoon-fed, or who would expect that this never loses. Because keep in mind, I've told you, you will lose, but the amount of times you will win if you're following our strategies will far outweigh the losses. But when everything is all set up, so again, I wanted to be honest with you guys, we've run into a little bit of a licensing hitch, and we're hoping to have that reviewed sooner rather than later. And when that is reviewed, you are sure to hear from me with everything. So I'll be able to set up like whole documentation and recordings of how to use it. So we just need to be a little more patient. I know it does take does take something, because we've been talking about this. We've been looking forward to this product, but just hang in there. Trust me, there's nothing really you can do with it now that you won't be able to do with it at a later date. So just know that I'm working hard and tirelessly behind the scenes to get this product out to you guys. But anyway, that is the October 2023 State of the Club recap. And as always, there's 2 links down in the description. One is a link to our Discord, which you can join totally for free and see what we are about. The second link is a link to our spreadsheet that tracks all the official trades that we do. And also every week, at the end of every week, I do a recording of all the trades we take, and I do a trade recap of each and every one of the trades, whether it's a win, whether it's a loss. Again, we like being transparent here, and I always post those every week in my YouTube channel. So you can go ahead and check those out. If you don't understand any of the strategies, those videos should be nice and concise, because they're small videos. They're not that lengthy, and they should be good to get you to understand what we're about and what we've been doing on a weekly basis. But until next time, I'll catch you guys in the next video. Peace.